I'm going to give you the ultimate guide to building good credit for 100% free. The ultimate guide to building good credit is going to be for anyone and everyone. If you're just coming out of high school, you have no idea how to start your credit up, that's going to be for you. All my 17 and 18-year-olds, people that are middle-aged, people that are out of college, people that are in their 40s or 50s, anyone can use this guide to make you successful with your finances and your credit. Now, there are going to be some of you that have really crappy credit cards on your credit profile, and you're saying, I just want to get rid of them, Mike, and I don't blame you. You should or you shouldn't is always the big question. Now, I want you to understand something. If you close a credit card account or if you close an account, it's still going to stay on your credit report for up to 10 years. That's very important to understand. So it could be a huge waste of your time. And also understand, anytime you close an account, it could have a negative impact on your credit profile. I can't say whether it will or it will not, but normally it does. But everyone's credit profile is different. So I can't tell you, yeah, shut them all down, get rid of them. No, I don't want to give you the worst advice possible and then you destroy your credit profile, because when you close a credit card account, you automatically lose the age. Now, you'll still have the payment history behind it, and this is why people say, well, you know, I want to just delete the account because it's closed. No, do not delete a closed account ever, because if you delete a closed account, yes, you lost the age, but if you delete that closed account, you're going to rip away all of that payment history, destroying your credit profile and destroying your credit score. So at the end of the day, you're going to have to make the adult decision on whether or not you want to close it and bite the bullet, lose some points right now, and then gain them back for the long haul. But again, remember, that closed account will still stay on your credit report for up to 10 years after you close it. There are going to be 3 very important steps to this video that you do not want to miss. Step 1, get your finances in order. Step 2, lay the foundation. And step 3, build your credit profile. Now let's jump into step number 1, get your finances in order. Now, what we're seeing more than anything right now is people are going through financial hardships and they immediately think that credit repair is the answer. I'm here to tell you, credit repair is not the answer. Stop wasting your money on credit repair and focus on getting your finances back in order. If you have any type of debt, like credit card debt, focus on getting yourself out of debt first. A lot of people make the huge mistake and think that they can get into credit with debt and that credit is going to save you, and it is not there to save you. You are not financially sound and your mindset isn't there yet. So you'll just get yourself into more debt and make the situation even worse and ruin your credit even more. So this is why it's very important to get your financial house in order. The final step in step 1 is going to be where you bank at. Banking with these massive conglomerate banks like Bank of America, Wells Fargo, Truist Bank, PNC. You do not want to be with those big banks. You want to be with a credit union. A credit union is relationship banking. That's where you want to be, because you need to learn how to bank properly with an actual credit union and learn to become the asset. And when I'm referring to actual credit unions, I'm not talking about your smaller local regional credit unions. I'm talking about the big credit unions that are all across the United States, or they're big credit unions in their specific state. Because when you have a smaller credit union, a smaller credit union doesn't have the flexibility and doesn't have the cash flow as a big credit union, just like Navy Federal, because of course they have more members. The bigger the credit union, the more members they have, the more money they'll have to give you high limit credit cards with. Let me give you a list of all the credit unions that I would recommend to anybody. First on the list is Navy Federal. Number 2, Andrews Federal Credit Union. Number 3, NIH. Number 4, Longleaf Federal Credit Union. Number 5, NASA Federal Credit Union. Number 6, DCU. Number 7, Apple Federal Credit Union. Number 8, Patelco Credit Union. Number 9, Liberty Federal Credit Union. And number 10, Dover Federal Credit Union. These are not in any specific order. I just wrote them down just like this. Now we're on to step number 2. Now you want to pick one of those credit unions that fits you best. Now I can recommend credit unions all day, but it has to make sense for you and not for me. Now we're going to move on to step number 2. Step number 2 is laying the foundation. Now that we have laid the foundation, we have picked out the credit union that best fits you. Now we're going to open up a checking and a savings account. You could just do the free checking and savings. Don't do the paid version. It is not necessary. Any extra money that you have, whether it be $1, $5, $10, $100, $10,000, put it into your savings account and do not touch it. That is very important that you understand. Your savings account is what's going to make you the asset to this credit union. Next, you want to do a secured loan. I would say 99.9% of all these credit unions that I recommended to you also offer a secured loan. You want to do a secured loan for a minimum term of 24 months. Anything less is not worth it to you, because if you do one for 6 months, it's going to open and close in 6 months, and it can do some damage, and it can open, help your credit profile for a little bit, and then it can drop it. Now, everyone's going to be different, but I'm warning you just so you know and you don't make the wrong mistake. 24 months is the sweet spot. We want to build age of credit where it matters, and it's going to matter with the credit union. Once your secured loan is actually set up and you've got it going and rolling, you want to go ahead and make sure that they do not set it on auto payment, because once your actual secured loan shows up on your credit report, you want to pay off 80% of that loan and put the remaining 20% on auto payment for the remaining 24 months. Once you put it on auto payment, you're good to go. You're going to have a lower payment. Now, you need to make sure that you do the research with your credit union and figure out what's the monthly minimum payment that you can do on your secured loan. Ask as many questions as you like, because every single credit union is going to be different, and I can't cover that all in the same video. So remember, you're going to do your loan. Let's say hypothetically you're going to do a $200 secured loan. Now, you're going to give them $200. They're going to put it into your savings. It can't be touched. It can't be taken out. Then you're going to start to pay them on that actual $200 loan also. Once it shows up on your credit report, then you're going to call the credit union and pay off 80% of the loan and put the remaining amount on auto payment for the next 24 months. You just have to make sure that there's actual money in the account to pay it off every single month, and you're perfectly fine. These steps are going to help you build your internal credit score with every credit union, because every credit union has an internal credit score. And also be aware, it is not necessary to do any secured credit cards with any credit union or any other bank. It's not necessary. We want to keep those off of your credit profile. We want to show the bank only high limit credit cards. That's all we want on our credit profile. So using a secured credit card is pointless in my personal opinion. Some other people want to argue about it, but I don't want them on your credit profile. Let's keep them off, because we can get to the high limits without a secured credit card. Last part's the most important. Now, the final part in step number 2 is to do a direct deposit. You want to make sure that the majority of your money is going into this new relationship with the credit union. This is going to establish it and help build up those data points that they need to see. Now you're going to sit and wait for 6 to 8 months minimum and let your account grow. Let your savings account grow. Remember, you don't have to put a lot of money in your savings account, but you want to put as much as you possibly can. And this is a step in your life where you're becoming more financially stable and you're actually contributing more to your savings account and watching it grow. In those 6 to 8 months, you're going to get bored. You're going to get tired. You're like, I want to apply for something. No, don't apply for any crappy credit cards. Don't take any offers in the mail. Stay away from all the crappy credit cards. And once you have hit that 6 to 8 month mark, then you're going to apply for one of the mid-tier credit cards with the credit union. And I'm almost willing to guarantee you that if you follow every single one of these steps, you're going to get anywhere from a $10,000 and above credit card limit, and you're going to be shocked. Now remember, this is going to be your first and only big limit credit card. It's the only one hard inquiry you're going to get. You're not going to apply for anything else. You're going to get this card. Hopefully you got more than a $10,000 credit limit. You're going to use it every month and pay off your cell phone bill, your light bill, your car insurance, whatever you can pay with your credit card. You pay it with your credit card and then pay off your credit card in full. Never allow your credit card to ever report a balance on that credit card. That is your main focus. And you want to use this credit card and do all these things I just told you for another 6 to 8 months. And here is another bonus. If you do this exactly what I told you with your credit card for 6 to 8 months with that credit union, if they have the option inside of the app to request a credit limit increase without a hard inquiry, request it and get that credit limit increase in 6 to 8 months. As long as you're not carrying a balance and you're using your credit card responsibly, the credit union will give it to you with no problem, or they might just give it to you automatically. So now you got your checking and your savings. You got some money that's squared away in your savings that's just growing. You're working on your relationship. You have a secured loan. You're paying on your secured loan for a nice period of 2 years. Now you have a credit card that you've had for over 6 to 8 months. You see what we're doing here? We're slowly growing our credit profile. You need your credit to grow and age. That is the secret to growing a good credit profile. Not adding a bunch of junk to it, not believing all these people that you have to have 100 credit cards. You don't. If you build it properly, you can get approved for anything. It doesn't matter if you have a 750 credit score, a 790, or an 850. You can still get declined for any type of lending if your credit profile is not structured properly. Now let's move on to step number 2. We're going to build your credit profile. Now this is the master plan right here. Once we've already built our foundation, now we're going to build upon it. It's like building a house. We're going to build on that foundation and build our house that we want to live in for the next 10 years. Because remember, I told you earlier, even if you close an account, it's going to stay on your credit report for up to 10 years. So we're in this for the long haul. You're only going to need 3 to 5 credit cards at maximum. I've seen people with 850 credit scores with only 2 credit cards, but really the sweet spot is going to be 3 to 5. You don't have to get anything crazy. You don't have to get credit cards with annual fees. You want to be the pickiest person ever because now your credit profile is your future. And if you make the wrong choice, guess what? Now we're stuck with it. You don't want to open and close accounts. You don't want to be applying for a lot of credit. The more you apply for credit, the more you look thirsty. And this is why banks decline people who are applying for too much credit. So now we're building our mix of credit. This is where it gets fun, where we get to choose the credit cards that we want, because remember, we're going to be the pickiest people ever when it comes to getting credit cards. So now we have our secured loan from the credit union. We have our credit card from the credit union. Now, if you want, you can build upon it and get a second credit card with the credit union, but I strongly suggest against it. You want to use another credit union to get a different credit card from them. That's just my own personal view, because you want to mix it up. You want to have a good mix on your credit profile. Now, you want to get 1 to 2 credit cards with a Visa or MasterCard logo on them. Since you already have the credit union one that has a Visa or MasterCard logo on it, you can go after something like a Chase Freedom Flex or a Chase Sapphire Preferred, because you want to get out of the way getting into the Chase family right out the gate with your first 5 hard inquiries. Because remember, if you have more than 5 new accounts or 5 hard inquiries in the most recent 24 months, Chase will automatically decline you and they won't let you into the Chase family. So let's get it out of the way right out the gate after we get our credit card with the credit union. Pick a Chase credit card that makes sense for you, not for me, but to you. Next up, we want to have a medical credit card. I know that sounds crazy, right? Like, but why? Because remember, we're adding to the mix of credit. So adding a medical credit card like a care credit card. Now, you may say, I may not want it or not. You know, you can use it for so many different things. It's not just for when you get sick. It could be for any type of dental issues. It could be for your pets. The care credit card is a good credit card to have in your wallet for those times. And you can get introductory offers at 0% interest for like 24 months, but you need to pay it off in full, because if you don't pay it off in full, that interest will accrue. Next up, you want to have at least 1 store credit card. Now, one of my favorites is the Victoria's Secret card. I know that sounds crazy, right? Now, a store credit card, a lot of people hate on them and say, no, don't get those, they're crap. Remember, we're building a mix and we're building a credit profile. If you get the Victoria's Secret credit card, everyone automatically thinks, oh, it's like the women's store. Why would I get that? Well, guess what, ladies and gentlemen? You can use the Victoria's Secret credit card at the White Barn Candle store, and you can also use it at Bath and Body Works. So what I do during Christmas time, I give all the women in my family stuff from Bath and Body Works, and I keep my actual credit card active. And my Victoria's Secret credit card has a $10,000 credit limit on it. Exactly. You didn't think that was possible, did you? But it is. And if you're a single guy, you could buy candles for your house and make your house smell nice, and believe me, your ladies will thank you for it. And your final credit card to add to the mix of your credit profile is going to be a branded store credit card. So this is a Verizon wireless credit card that can be used anywhere. It has a Visa logo on the back. I can't show it to you because that's where the card number is at, but any type of store credit card, it's a branded store credit card that has a Visa logo or a MasterCard logo that can be accepted anywhere. So another one is a TJ Maxx credit card. You can use that anywhere also. This is going to finalize all of the credit cards that you can have on your credit profile to make the proper mix. Now remember, you don't have to get all of these credit cards. That's not what I'm telling you. I'm just telling you this is the proper mix of credit cards to have on your credit profile and how to build it out and structure it properly so you look presentable to banks. And it's very important to understand that getting high limit credit cards, it's not about flexing and be like, oh, I can spend $10,000 at one point. No, that's not the point. The point is, when you have high limit credit cards on your credit profile, every time you apply for any type of lending product, a bank is going to see that you are a responsible borrower. So if you have a $10,000, $20,000, or $30,000 credit card on your credit profile, another bank is going to be incentivized to give you a higher limit right out the gate instead of starting you at a low limit. And now the final two pieces to this puzzle is going to be a car loan or a mortgage or both. Now, I don't want you to think that you have to go get a car. No, I'm not saying that. Or you have to go buy a house. No, I'm not saying that. What I'm saying is this is what we've seen historically to build the proper balanced credit profile that lenders love to see. Now, if you're trying to buy a car, now remember, you don't have to buy a car to build credit. You don't have to continuously buy brand new cars. No, that's not what I'm saying. You just need to understand that adding it to your credit profile adds to a mix, making it even nicer for lenders to look at. Once you watch your credit score grow and those high limits start to come in, you get a little trigger happy. It's all about self-control, controlling your finances and controlling your credit score. Now, let me show you exactly what we just did when we built this whole credit profile out. Now, we're gonna put my breaking down your credit score slide up on the screen so you can see it. Now, you control your credit score. A lot of people have this myth that, oh no, the banks control everything. They're the ones, and FICO's destroying my credit score. No, you truly control 550 points of your credit score. You're the reason why your score goes up and down because you don't know what you're doing. Now, what we did here is we focused on building age, correct? We said we want to open our accounts, let them age, let them do their thing. Then we built on our credit mix. So that's another 10%. So credit age is 15%, credit mix is 10%. So we're building on that credit mix. Inquiries, we're keeping our inquiries low because that is 10% of our credit score. Focusing on not applying for everything, being very picky. Now we're gonna build on our payment history as we continue to grow. That's 35% of your credit score. And then 30% is utilization. Remember what we said? Not carrying balances. So just right there between credit utilization and payment history, that's 65% of your credit score that you have taken control of. So you're gonna get a maximum of 100 points per those just those two categories right there. So for payment history, you can get 192.5 points with no late payments in the past 24 months. Credit utilization, you can get 165 points by maintaining it below 9% utilization at all times. Credit age is going to get you a maximum of 82.5 points. Letting your credit age and grow is key. Now your credit mix, as we talked about it, building and adding to that mix is always a good thing. You're going to get a maximum of 55 points. And then hard inquiries is 55 points for a total of 550 points that you control. You automatically get 300 points when you just start credit, unless you're in the negative already, which I've seen before, but you're automatically going to get 300 points just for starting credit, just for joining the game. And that, ladies and gentlemen, is the ultimate guide to building good credit. I hope you enjoyed this video. Share it with your friends and family. Make sure that you watch the next video because it is about how to delete hard inquiries from your credit report. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.